Hello everyone, welcome back. This is Dr. Mercado speaking. This is Accounting 1304, Introduction to Accounting 2, and this week we are going to be covering Chapter 12, which deals with special journals. Okay, like every week, I can't emphasize it enough to please read the chapter. It is very important that you read the chapter. It is very important that you complete your weekly assignments. The problems on your test are coming straight out of your homework. Okay, if you're not practicing your homework, you're not going to do well on your test. In accounting, you have to practice. You have to do the problems. You have to apply what you learn. It's not multiple choice based. Okay, you actually have to complete specific tasks. So it's very important that you practice. I don't give you homework or quizzes, just to kill time. No, I give them for a purpose, and the purpose is that you practice what you're doing, because once you go out there into the workforce, you're going to be doing all of these things, and then you're not going to know what to do. So it's very important that you take advantage of the opportunity. You practice. If you get stuck on something, you ask me, or you go with the tutoring center, or you contact some of your other fellow classmates, create study groups, whatever you need to do to be able to understand what is going on each week. Okay, so this week we are dealing with special journals. Okay, so basically a special journal is a journal designed for recording only certain kinds of transactions. Okay, the primary purpose of using special journals is to save time. Efficiency is very important in any business. Okay, so to save time when we're journalizing and posting transactions. So that is why we use special journals. Now, a variety of special journals are covered in this chapter. We have a sales journal, which is a special journal for recording sales of merchandise on account. We also have a cash receipts journal, which is a special journal for recording cash receipts. What else do we have in this chapter? We also have a purchases journal that is a special journal for recording purchases of merchandise on account. We have a cash payments journal, which is a special journal for recording cash payments. Let me see. I'm browsing through the chapter to see what else I find. So there's a variety of special journals that we're going to be covering. Okay, and I've given you a little bit of mixture of the different types of journals. That way we can practice. Okay, so in this lecture, I am going to go over exercise 12.3. Let me see what exercise 12.3 covers. Let's jump into that. Okay, so exercise 12.3 deals with journalizing cash receipts. So they're asking us, enter the following transactions in a cash receipts journal. And then they give us 5 transactions for July. Okay, so a cash receipts journal is a special journal used to record only cash receipt transactions. If you received cash, you're going to record it in your cash receipts journal. Okay, so let's see what we're going to do. I've got the setup of the cash receipts journal already set up here for you. So we're going to start off with the date, and then we have the account that's going to get credited. We're going to have our post reference, our general credit, our accounts receivable credit, our sales credit, our sales tax payable credit, and our cash debit. Okay, the general credit is used if it does not apply to the accounts receivable credit or the sales credit or the sales tax payable credit. So if it doesn't apply into any of those categories, you use the general credit. And then cash debit, whenever we have to debit cash, we use the cash debit account. Okay, so let's start with the first one. We have July the 6th. Okay, so let's put July, and this is happening on July the 6th. Okay, so it says Darren Chesbro made a payment on account, $527. Okay, so we are receiving the money from Chesbro. Okay, so the first we're going to go ahead and it says account credited. What account are we going to credit for this payment that is being made? Well, I'm going to credit the Chesbro account, okay? Because she's the one making the payment, okay? Now, it says it's a payment on account. So she's paying money that she owed, okay? Because they owed money previously, we know that we're going to have to credit our accounts receivable account, okay? So the accounts receivable is going to receive a credit. Okay? And what did we, the company, receive? Well, we received cash because a cash payment was made for 527. So whenever we receive cash, cash is debited for 527. So here we have cash gets debited, accounts receivable gets credited for 527. Okay? On the 10th, we made cash sales for the week, $2,470. So like you can see here, there is not one specific customer. This is made up of a variety of walk-in customers. So we made cash sales of $2,470, okay? Because we don't have a specific account this is affecting, we're going to leave the account credited blank, okay? Now, what are we doing here? We made sales for the week. Okay, sales has a normal balance of a credit. So I'm going to go ahead and I'm going to credit my sales credit 2470. Okay, so I'm recording my sales for the week of 2470. Well, what did we receive when we made those sales? When we make a sale on account, we receive cash. So our cash increases, so cash gets debited, 2,470. Okay. On the 14th, okay, let's see what happened on the 14th. Adam Cassidy made a payment on account, $394. So we're going to identify the name of the customer. This is A. Cassidy. And it says here, a payment on account. So Cassidy owed us some money and now he's making a payment of $394. I'm going to record that under my credit for accounts receivable of $394. And what did we receive? Well, if Adam made a payment towards us, then we are receiving cash of $394. So cash gets debited $394, accounts receivable gets credited $394. Okay. Let's see what happened on the 15th. Jill So made a payment on account $203. So it's the same entry, it's just a different name of a customer and a different dollar amount. So here we have Y So. Okay. And it says that So is making a payment on account for $203. And we, the business, received that money. So my cash is going to increase by debiting it $203. Okay. And then last but not least, we've got made cash sales for the week, $23.60. Okay. So these are cash sales. We don't know who they were made to. So we're going to leave the account credited blank. Okay. And made cash sales. So because we made cash sales, we're going to put that under sales credit. And that was for $23.60. Okay. So we made cash sales for the week. Now we're going to deposit those in the bank. So that becomes a debit to the customer. Okay. So here we have cash is being debited for the business. Our cash is increasing by $23.60. Okay. So we collected some money. Okay. And that is basically your cash receipts journal. If you receive cash, you just have to identify, did you receive it because they owed you? You had an accounts receivable set up? Because if you do, you need to clear it. Or if it's just a regular day, nothing, special is going on. And then we can go ahead and, in this particular case, the accounts receivable credit was when someone owes us money. The sales credit is when we sell cash for cash on that specific week. Okay. So any cash sales made for any transaction. Okay. Usually they don't record the transactions on a daily basis. It depends on the business. Some businesses batch out every day, every end of day, and if that happens, then every day you can do your sales credit. But other businesses, they tend to group them together for the week, whatever the sales were done from Monday through Sunday, and then they make one lump sum entry, which is the case here. So if it's something that you're paying because someone owed you money, it's under the accounts receivable credit. If it's just a normal transaction, where you are selling your merchandise for cash, those are cash sales, it goes under sales credit. Now, you have to put yourself in the position of the company that is receiving the money. Okay, so they're paying you money because they're paying us money, then cash will always be debited. Cash increases with the debit. So that should always be a debit transaction right there. Okay, and this is cash receipts. So we only record money received. Okay, No money leaving the business. No, only whatever is received is recorded into your cash receipts journal. Okay, so that is basically it for this specific lecture. I will be going over another problem which is very lengthy. It covers several of the components of the special journals, so that we're going to be able to cover. Now, I forgot to mention, when we have our cash receipts journal, we usually have a page number. In this particular problem, they didn't include a page number, but usually we like to include it for our post-reference purposes. When we are posting them, we know where they need to be posted. Okay, so that is basically it for this lecture. Um, and I will be recording an additional lecture covering a lengthier problem. But if you have any questions, please don't hesitate to reach out to me. And I hope all of you have a wonderful rest of your week. Thank you.